Okay, so I did a post on the NetPicks blog about the importance of creating various different scenarios or hypotheses for what the market might do on any day, realistically, but also in particular on a day where you know that there's likely to be a big move, or there has a higher potential for there to be a big move, and just such a day occurred last week. It was the ECB, and there was a lot of talk of further stimulus and weak growth in the Eurozone. And so I wanted to talk about briefly the some of the scenarios we talked a little bit about in the EU trade room. So first things first, this is a 60-minute Euro futures chart. We need to take a look at what the key technical features are going to be here. So I'm not going to go back too far in this, but broadly speaking, this is a market that has been in balance for quite some time, since a large sell-off last year. The first thing to consider here was that we had a spike through the high of a relatively medium to long-term balance following the sell-off from last year. We had the spike get through the high, which was roughly speaking here. I'm not going to go any further back on this chart, but it was roughly speaking here. We spiked through, and what you can see right here is that technically this is quite a useful indication when you get a spike through a level, or a move through a level, that when it pulls back, if it then pulls back to it and rejects it, it does show that is a relevant level, and this is what happened in this case. And then what we've done is we've gone into this short-ish term balance over the last month or so, since the end of August, pretty much, and there have been some minor balances within this, but overall you can see there's a fairly broad balance, which I'll just show you here. Roughly speaking, that looks something like that. Now, what we can do though is we can look at this a little bit more technically in depth, so that we can see whether the key important levels are going to be if the ECB were to do something, which of course we know that they have done something, but again, we're looking at this retrospectively just to try and get a better idea of how you might formulate some hypotheses before the event itself. So what we can see here, first of all, is that after the spike, the pullback of the pullback, because that's what we're in now, has finally reached around the 61.8% level. Now, I do use Fibonacci's, not as places to get in, but I'm trying to gauge the level of intent of a market, and what it's saying is, temporarily at least, this move is over, pulling back to the 61.8%. Anything through the 50% becomes much less likely that it's going to continue in the original direction in the short term. Now, at this point here, we can draw in fairly shallow, and it's not absolutely essential that you draw this in, but it just sort of says, look, this is roughly what's going on. You can see that we don't really know what to do. It's not quite sideways, it's sort of drifting up to an extent, but on the other hand, it is relatively sideways. The balance is pretty good. So early on in the session, what we can see is that the market was near around 113.50, roughly somewhere towards the middle of the channel. In fact, right before the ECB, it was a little bit lower. It had, in fact, retested and breached just by a handful of ticks this 113.14. Now, of course, a small breach of a level before a pullback that re-breaks it from the other side tends to be a precursor to a bit of a reversal, and in fact that is what we saw. But again, just to recap, the ECB may or may not have instigated QE. This is the key thing that's going to move the market. So they may or may not be at least indicating that they're going to provide more easing, weakening the euro against other major currencies, particularly the dollar, which the Fed may even be doing the opposite by raising rates at some point in the not too distant future. So if that were to happen, the euro should devalue. If they are to indicate that it is far less likely that the market participants are anticipating, then the chances are that this market is likely to appreciate. If it doesn't happen in either of those two ways, then the chances are that there might be a bit of head scratching and tests in both directions. So let's just have a look really briefly at what the important levels are going to be. So first of all, let's have a look at the last swing and the pullback to that level. So the last swing is up here from this low on the 23rd of September up to the high on the 15th of October. Now, what you can see is this last pullback here was the 50% of that move. So that's quite important. 50% reacting quite so well to that level is indicative to me that it's going to be important. So what we can do here, in fact, what we'll do here is I'll turn off the other lines and I'll just note this particular level in the way that I normally put key levels, which is just to make it gold and a dashed line. So we'll do that, and that'll show you that that is an important level that we want to keep an eye on. Now, the other important level, in fact, is going to be the extension of this last move here to the top here around 115. So this is the 0 line, so what we'll do is we'll also make that gold and dashed, because that's going to be fairly important as well. And these are just a few lines here that we're looking at. So we're not going to put the 100% in because this is going to be more important here. The low of the initial test down, and that's at 03. Okay, so this line is going to be more important at 03 than this one here at 11.20. But then this price here down here, which is where the origination of this big spike came from, is going to be the next important level. Down below this 03 is an extra 68 ticks, so it really could. Although this looks like a small space between these two levels, it could end up being a fairly okay move to catch, but not massive. So I'm going to just draw on that. So we're just going to draw on that, and then we'll draw on another few horizontal lines to show the extended targets beyond where we're currently looking. If it were to really be hugely different from where we expected things to go. Just get rid of a few of these lines here because they're not necessary right now. We want the 100% on as well, though, because the 100% is right at the top, so we'll get that drawn in. So we've got the line up here, the top of the spike, the bottom, which is the last major pullback. We've got this line here, which is the 50% of this swing, and the last recent low, swing low. the swing high here, which is obviously the extreme of this last big swing here, and the 61.8% area of this pullback of this spike. So let's draw this line in here, which is the origination of the spike, of the big spike, and we'll also just draw in this recent major low price down here. So what you can begin to see is a framework of where the key areas might be. Now there are other ways of looking at this, but it's so long as you're making sure that you're identifying the important structures within the market, and looking at for key levels where there might be decisions to be made, you really don't need to look much further than this kind of chart. Lots of different indicators you can add, but the key thing is just major points, major moves, major balances, and where the transitions between those lie. And then really on a day like the ECB, just looking further afield than you would normally look for levels. So let's consider that right now. So what we have here is we're roughly I said around 113.50 earlier, 113.20. We're around 113.20 to 50. We've got a potentially important level up here around 11500, and then down towards 111.50 and 111.00. 111.50 because it's the bottom end of the channel. So it's not quite as important, but it is important to an extent. The real key one is going to be 111. So roughly speaking, you're looking at 200 ticks or pips either side of where we currently sit. If we were to break that 113.13, this last swing low here, and the 50% of this last leg here, then we've probably got a good opportunity to move towards at least this channel low, 115.50, maybe 111.00, and with the extended target down here of, I think it was 110.35ish. And if things really got going, obviously you might target this low here, but this becomes far less likely. I mean, it would be a very big move if that were to happen. If they said, well, actually, we're not so bothered about giving the market more liquidity and stimulus right now, we think that growth will pick up from what we've done already, the euro is likely to appreciate. So in this scenario, this price becomes key, and you're likely to get, especially as we've already breached that 50% just by a few ticks and not found sellers, you're likely to get a move towards a test of that. At the very least, probably an initial test of this swing high, which is just over 114.00. It's the kind of the last price before you get into this sell-off move. So realistically, so long as that didn't hold at 114.100ish, you're looking at 115.00, and then potentially 78.6 of this move, and a reattempt at taking this high out here. So the question is, what happens if we don't see either of those with any conviction? So be looking at possibly moving towards there, above that sort of area. Then if we get below this area, moving towards maybe this sort of area, possibly slightly above. So you might see something like that, and it just going into balance at the end of the day, and then resolving either way later on, maybe just maintaining itself within this broader channel for a while longer. So those broadly speaking are the three different scenarios that we may end up facing. And of course, what did happen was that there was enough for the market to expect that there would be further support for the market, and the euro would be, as a consequence, devalued relative to the dollar. So what did happen was that we got a sell-off, and it happened that it ended up going towards that bottom channel line pretty quickly, and it got very close to this 113.03, but didn't quite get there on the day, and we've gone through since. I did pull back and retest that channel, interestingly enough, nearly to the tick, but not quite. And this is where we're currently sitting. So you can see that by having a much better idea for where it could get to, you're prepared for how far it might go, and therefore what might constitute as a good setup still. You know, if it's gone quite far on a normal day, for example, you might not be thinking that it's still a good setup to take for a continuation. I hope that you can see that that's been a useful exercise for particularly days where there's likely to be bigger than normal movement, and that you'll start to use and appreciate this kind of methodology. Thanks for watching.